How's it going, traders? Richard K from Price Action and Income, and welcome back to another one of my market geometry videos. So in today's video, I want to discuss the topic of multi-time frame analysis and why it is so important to use multiple time frames in your own strategies. As you all know, I use market geometry to define trends. I would like to know where corrections happen within trends, and also like to know where important market geometry lines are related to the bigger picture, or can I say a very high time frame. Now, what I'm going to show you today is going to be on the Australian dollar, US dollar. I've done a video on multiple time frame analysis. It was one of my first videos on this channel, but I think it was time to just update it and just show you some new price action, some recent setups using market geometry, and why it is so important using multiple time frames. All right, so on the chart in front of you, we got the Australian dollar, US dollar, and it's set to a weekly time frame. Now, guys, I don't necessarily trade from a weekly time frame. It's just very important that when I do trade from a lower time frame, that I at least know where important market geometry lines are with relating to the bigger picture, if I can say that. Now, I want to address this strong move upwards that started here in March last year. There was a lot of currencies that made very strong reversals around about that time frame. There's also another thing I want to address is how do you apply market geometry when you have these strong one-directional moves, which is something I did not address in the previous video. So when I do start on a weekly time frame, again, guys, I don't necessarily trade from this time frame. I just want to know where the important market geometry lines are. I would generally start with the major trend, which is in this case down from this sort of July high in 2011 up into this March low when this massive jump to the upside started. And I would first like to start off by drawing market geometry lines, in my case probably pitchforks, and in some cases channel lines, to see if this trend could have been defined by the pitchfork median lines. And then if I do see some great support and resistance areas where price respected my median lines, I would quite often leave them on the chart and then just make sure that if I do take a trade, in this case, it would have been only bullish trades. As price reaches important lines or finds support at important lines, I at least know where they are so that I do not trade against those lines. Because quite often, if you do perform market geometry from a very high time frame, price will continuously respect those lines into the future. So to define this trend, I would always want to know what happened prior to this important low here. And to do that, I will always mostly, or most cases, go to a higher time frame like the weekly over here, and don't go to monthly time frames at all. Then from a weekly, I'll drill down to a daily and also down to 4-hour chart where I'd like to find my trade setups. Now, a lot of you might say, like, it's great to draw these lines in hindsight, but the benefit of performing market analysis is that it is great to see what happened in the past, draw those lines, especially from a higher time frame, and then just be aware of them when you are trading, or if price is approaching them before you enter into a trade. Now, guys, with hindsight, I can pretty much tell you since this high, this looks to me like a triangle correction. And to define that, price came down and then it made a clear triangle. All right. And that was probably the termination point of this triangle. This was the starting point of this triangle. Now, if you've been following my previous videos, you'll quite often see where I do deal with triangles, that I like to anchor my pitchforks using the beginning as my second anchor and my third anchor, the end of triangles, rather than, let me just show you. I think visually it's better to explain it this way. So generally, to draw a pitchfork, you want to use 3 pivot points, as you all know, going downwards. And in most cases, people would do this. They want to use this low and lower high. In this case, you see that price completely moved outside of the boundaries of this pitchfork, which makes it pretty much useless then. Because this was a triangle, these lines I'm going to be showing you now, it's actually been on my charts for multiple years already. So instead of using the second anchor point here and this lower high over here, I use the start of this triangle and where this triangle ended. Again, it does not catch this low here, which is also pretty useless to use this setting, which is the standard pitchfork setting. So what I quite often do, and you've probably seen this if you've been following me for a while, is that my other go-to setting is the shift pitchfork. Now this does show us that price respected it much better, although price left the boundaries in the bottom here during the strong decline. But as you all know, I quite like to copy and paste the same angles. You can just grab that and then move it below the upper pitchfork lines, and you can see that this actually gave us a low. Although I didn't trade that low, this just shows me that what I call the market is respecting the angle or the slope of these pitchforks. And you can easily see that by following what price did previously. We had some resistance here, support, resistance. And although price left it down here, you've seen we caught this one here. There was resistance at this 50-point dash line, this low red warning line support. And in any case, I would, in many cases, and I'm talking about this, what's this, more than 10 years of historical data, I would leave this pitchfork on there. And although it's sloping downwards, it's not to say that I'm only looking for shorts, because if you were at any time short during this strong incline, you would have been losing money head over fist. So price moved up to the upside, and this is where I want to get to the other point. How do you perform market geometry when you really do not have any sort of nice zigzag movements, but instead this really strong moves to the upside? And this brings me to going to a smaller time frame, why it's so important to use a smaller time frame. And when I use a weekly, I would then go to a daily. Let's just open that up, and you'll see that I've left that pitchfork on there. And here's a very good example of how price moved up. Remember, we doubled this one down from the weekly. It gave us this low. Price moved up. It broke above it. And in many cases, this breaking of these lines to the upside should start telling you that price is very strong. Obviously, one directional moving to the upside very strongly with very little zigzags in between. And as price moves to the upside, you'll quite often find that these lines, although, like I said, sloping downwards, price will move lower back towards them and find support like it did over here in October. And this was sort of a time frame where we were looking at for support, and we also entered into a long position, which was a great trade to take part in. But quite often, if you'll go from a daily, let me just open this chart up for you a little bit. I want to address now that question of how do I use a pitchfork over a strong move like this? And you'll very quickly see that if I were to, let's say, use this low, do that first higher high and this high low here, it's absolutely useless to use these settings, even on a standard or shift or using channels or whatever the case might be. So yes, you could have then waited for maybe small corrections within this, like you've always seen me do. We can do little corrections using pitchforks, sloping in the other direction of the bullish trend. But just to show you what I typically do, we got a trade here, and then quite often, if you want to see where you could get into a trade during this next move to the upside, there was another great opportunity along the way. I would then, with very strong directional moves like this, look at the 3 pivot points or anchor points, as I call it, that were the most strongest or the most prominent, if I can say that, prior to this strong directional move to the upside again. And in that case, it would be this one, and that one, counting back with 1, 2, and 3. So in this case, you then need to figure out which setting of pitchfork you want to be using, and you'll be going from that one to that high over there, and this one down to here again. Now, this obviously would have probably given you a trade over here, but because we're dealing with strong trend, we need to slope it in the direction with a pitchfork that is going to define this strong upwards move, and the only one that's going to be doing that is the original pitchfork over here. And here you'll see that if you use the 3 most prominent pivot points or anchor points prior to the strong move to the upside, that it defined price perfectly until this high that we had in the beginning of this month, until this correction came down to the downside again. Here we had what we call an ABC, XABC. That was a tradable trade that could have been taken. Quite often you want to be sloping, let me just take this one off for you, a pitchfork opposite as to what your longer time frame is doing. In this case, sorry, your bullish move here, you want to slope something in the opposite direction to see if you can find the end of correction. Let me just use this quickly. This case, if you had the idea this could be an ABC, then price ended at the low median line in conjunction with that long-term median line that you have over there. That would have been a confluence point and a tradable trade opportunity. Even if you got in here with proper risk management, price did not break this high again, but if you use proper risk management and trailed your stops properly, then you probably would have even break even, or at least had a small bit of profit there. So I quite like using the what we call the ABC, WX, ABC points. In this case, this second ABC that also ended at this long-term median line moved out of the boundaries of this pitchfork. As you know, when I work with corrections, I like to use a shift pitchfork, because quite often they will find the end of corrections, and now you want to with a high probability, if I can say that, you want to slope this downwards, obviously trend up, and then when you get a correction, slope it in the direction of trend to figure out where you might get the end of correction. In this case, I was very aware that this long-term median line is here. We already had a trade here that went up, it failed, and it moved down to the downside again in 3 moves, and after we've seen this, we judged that this was a WXY wave, and price did not actually reach the bottom of here, but I knew that this long term was there. So in many cases, what you want to do, you want to slope another smaller pitchfork over the second ABC and figure out where you can find a confluence or an area where longer term time frames and your shorter term time frame market geometry areas cross, which gave a pretty decent buy zone over there. Very accurately, price moved to the upside. And as you know, guys, I don't just trade 40-50 times in a week. I like to wait and be patient, see if I can spot another good tradable opportunity, which is what happened over here. Let me just get my magnet board on. I drew a standard pitchfork using those previous anchor points I discussed before. Set it to the standard setting, and recently had a touch over here. In this case, I believe we had another ABC, XABC to the downside. But in this case, it would have been almost impossible to see another ABC. And this is where we get to go to another smaller time frame, like the 4 hour. So if I use a weekly, I'll go to a daily and then a 4 hour. If you prefer to trade smaller time frames, then if you wanted to use a daily, a 4 hour, and then maybe go to a 1 hour time frame, that is completely possible. This sort of analysis work on all time frames. In any case, so I'll leave these lines on there. If I were to switch then to a 4 hour chart, I use a smaller time frame so I can see what the chart structure here is showing me. And quite often you would have then not been wrong to think that this was an ABC. But as markets are, they tend to surprise you. Which one do I use again? I like to go to the shift pitchfork. Price touch this, where it confluenced on this upward sloping one, you want to find the end of the correction, so you need to slope a pitchfork in the direction of the correction. And where it hits the longer bullish term, in this case upper median line, we had a confluence area where another trade could have been taken. And you would have been completely right to take a trade there using this sort of analysis, because you wouldn't know when an ABC turns into something else like another ABC, and what we call, let me just label that for you, ABC, W, X, Y. So knowing this, could be after an ABC, my go-to pattern, next go-to pattern is a WXY, or double zigzag as it's called in simple terms. That was a tradable event over here, and look what happened when price returned to the center median line of this upward sloping bullish standard pitchfork. If you've been following market geometry for a while, especially when it comes to pitchforks, Dr. Alan Andrews, which created the pitchforks, generally said that there's about an 80% chance that price will gravitate back towards your center median line, which is exactly what happened over here. And look at this beautiful confluence area that we had over there. So there was another tradable event. In my other videos, I do explain the entry conditions that I look at. I like to use or search for momentum divergence between lows. I also like to see reversal candlestick patterns. And even if you didn't take this, we had a move to up top side. We had another touch of the center median line of this bullish standard pitchfork. And we had another reversal pattern there, giving you two opportunities to get into this market. Now, where the price is actually going to hit new highs, that's just, we need to see. We won't know if that's going to happen. But in any case, there was 2, 1. In this case, you would have waited for price to touch a longer term upward sloping with a shorter term downward sloping median line. Sorry, I'm mincing my words sometimes. It can sometimes get confusing. And this would have been a tradable event, a second tradable event with much bigger profit to the upside. And guys, this is why it's so important to use a multiple time frame analysis. Just from the longer term on that weekly, it's great to know that if you were trading, for example, heading into this high, that you are aware, let's get rid of these lines again, of where these important lines are, because for sure you definitely do not want to be opening a long position going into a very strong resistance line like this before. Although that line slopes downwards, we are just watching to see if price will eventually break above it, and that will obviously help with your bias direction as well. So guys, and that in short is my market geometry video for today. I addressed why it's so important to use multiple time frame analysis. Again, guys, you don't necessarily have to use weekly, dailies, and 4 hours. Like I said before, you can go daily, 4 hour, 1 hours. You can even use another 3, like 4 hours. I would use a 1 hour, and then maybe go down to something like a 20-minute or 30-minute, for example, to do some analysis. Obviously, with shorter term moves there, price tends to be way more noisy on shorter time frames. As you all know, I like using the longer time frames. But hopefully this video helped you and made you to see how these lines continuously work for long periods of time into the future. And yeah, hopefully it helped you guys out. If you liked today's video, then please leave a comment in the description below. Maybe you want me to have a look at one of your favorite markets. I'll be happy to cover that in the next video in the future. If you haven't done so before, please subscribe to this channel and hit the like button if you do not mind. And I'll be back next week with another market geometry video. Until then, guys, have a great day. Goodbye.